Hello everyone, welcome to Bald Guy Money. I am Bald Guy, and over the past 2 weeks, we have seen gold making new nominal highs, pushing its total market cap as measured by financial markets to nearly $15 trillion. At the same time, we've seen silver, a commodity we know is highly correlated to gold, grow in price by nearly 10%, and that's measured over the last month, as you can see here on the screen. But as gold starts to near its all-time inflation-adjusted high from January 1980, which was $2,687 per troy ounce, as you can see on the chart here, the price of gold, by the way, only has to rise 23% from here to get back to that high. But as we start to get close to that high, it has left many people wondering what is going on with silver, which, as you can see here on this chart, is a significant 483% off its inflation-adjusted all-time high, meaning it has to grow 483% to get back up to that level. And just a note to our viewers out there, remember that this uses closing prices, so intraday highs that reach up to $160 inflation-adjusted will not be reflected here. But at any rate, it's important to look at this data and ask the questions we're going to cover in this video, which are: Number one, why is silver lagging so far behind gold right now? Number two, what do we need to see happen in the market for silver to start gaining momentum and get back to a more historically appropriate price ratio versus gold? And finally, just before we answer this video's viewer question, which is a great one on the topic of silver, we will discuss how soon we will see silver get back to its inflation-adjusted high, which, as you saw earlier, was well above $100 per troy ounce. Now, just before we get into it, if you're in the United States and want to protect the value of your hard-earned money with real gold and silver, please check out channel partner Pimbex, who has these highly recognizable and globally appreciated silver Britannias on their site for as low as $26.53 per ounce right now. It's a great deal, and you'll see why in a moment, so I'll leave the link to this deal in the description below. And for those of you interested in gold or silver IRAs, give them a call at the number on the screen for a free consultation. Just please remember, if you get something from them, if you give them a call, let them know you came from the Bald Guy Money channel. So, getting back into it, as I've already mentioned, silver is kind of lagging behind gold with respect to price development, and I know it's making many silver stackers out there extremely frustrated. But what you all have to really understand is that this market is being front-run on the gold side of things by central banks. And what do I mean by that? Well, as you can see here, what is driving the price of gold up right now is the fact that central banks, as I've said many times before here on the channel, are feverishly adding gold to their balance sheets in an effort to offset risks associated with the US dollar and US debt, which they hold in the form of bonds, because the United States can no longer be trusted to responsibly manage the global reserve currency. Global central banks see people like AOC, who will probably remain a fixture in American politics for years to come, like Nancy Pelosi or Maxine Waters have. They see her as incapable of doing the right thing when it comes to controlling US government spending, and rightfully so. Ultimately, they view her and her colleagues as a threat to the stability of the currency as they continue to print and spend at rates that will soon rival some South American countries. And because central banks do not add silver to their balance sheets, they do not, we have seen the gold to silver ratio really break out since 2011, since the last blow-off top, which coincides very closely to when we saw central banks become net buyers of gold again. After they saw how the United States Federal Reserve would just print money at unprecedented levels to bail out bad actors in the financial system. So that, ladies and gentlemen, answers our first question. That is why we are seeing gold approaching its inflation-adjusted all-time highs right now because central banks can see the writing on the wall. They know more debasement of the US currency is on the way, and they don't want to hold a depreciating asset. Instead, as I said in this video where I talked about metals confiscation, they're printing money to buy gold, they're driving the price of gold up and pricing many honest, hardworking people out of the gold market. And mark my words, this will only continue. This is just the beginning of central banks printing to accumulate gold as a hedge against their US dollar holdings. But there is hope for people who are afraid that this trend is going to keep them totally priced out of the gold market. And that hope is silver. Because silver is very affordable today. In fact, looking at where we are versus the last 15 years, according to my gold and silver price analysis tool, and if you want the full version of this tool, it is available on my Patreon. I'll leave the link to join in the video description and pinned comment below. But we see that silver today is cheap compared to a basket of stocks, oil, sugar, and housing, which this tool uses to compare the price of silver to. And only two things, from my point of view, need to happen to get this moving quickly in the upwards direction, meaning away from cheap and back into the expensive territory. And that is, number one, participation of regular retail investors like you and me in this move to hedge fiat currency holdings with hard monetary assets like gold, like what the central banks are doing, but as well as silver. Because as it stands today, regular people are actually doing the opposite of what central banks are doing. They're selling their gold into this price strength, and the central banks are more than happy to print up the currency to take it off of their hands. But at some point in the not so distant future, retail investors are going to wake up to what's happening, and they are going to pile into gold, driving the price of gold up even higher, which will result in a spillover of people who can't afford gold into silver, which is going to see an incredible move upwards when that happens. So, how do I know this is going to happen? Well, I know it because I've seen it before. I have been stacking gold and silver for 16 years now, maybe a little bit longer, if we go down to the exact days, but let's call it 16 years. And I saw gold leading on price growth in my earliest days of stacking as central banks became net buyers again. And curiously, despite a spike in silver price in 2007 and 2008, driven by the invention of the smartphone and other silver-hungry smart devices like your smart TV or other screens, iPads, etc., gold really outperformed silver in the period from 2007 to 2009. And I argue that's where we're at in the cycle right now. That's where we're at today. In 2009, gold finally broke the $1,000 per ounce level and has basically stayed there ever since. Not long after that, retail investors started to understand what was going on, that their fiat currency was being debased by Ben Bernanke and the US Federal Reserve as they started what was called quantitative easing. And that, ladies and gentlemen, is just Washington talk for printing money. As regular people got wind of this and started to understand what the situation was and what the consequences of it were, they started piling into metals too. And that is when, in 2010 and 2011, we saw the blow-off top where the price of silver increased first by 38% year over year, and then by 74% year over year, measured by the average closing price. Performance, mind you, that blew gold away, driven by the fact that retail investors wanted affordable protection against the Washington money printers and started to participate in the metals market, which we're not seeing yet. Now, fast forward to today. We are breaking above the $2,000 per troy ounce level on gold, and I think we've put a floor in at that level as I've discussed in other videos recently. Now, we're just waiting for retail investors to wake up to what's going on here. And that is the fact that the stock market is likely in a liquidity bubble, and that may be why we saw Nvidia, as you can see here in this chart on the screen, why we saw it sharply correct on Friday in the face of rising unemployment, which is now at 3.9% officially, but likely much higher than that in reality. And when they do, when those retail investors wake up to what's happening and realize that a lot of the things they're holding, a lot of the paper assets they're holding are in a massive liquidity bubble, that is when we will start to see the real moves on silver, which will be reinforced by a resurgence in industrial demand driven by global manufacturing. My second point on the list, which has been in a prolonged state of contraction, but will at some point in the future correct to put more pressure on supply and upward pressure on the price of silver. Now, where does this take us? As I see it, this will eventually bring us back to a point where I expect to see prices near the 2011 inflation-adjusted high of $66.63 per troy ounce. And remember, my 2026 price target for silver is $60 an ounce, and that has been my target since 2021 when I started the channel. But what I don't expect to see, and I will be happy to be proven wrong on this topic, is a return to the 1980 high of $141 per troy ounce of silver. And that's because the specificities of that blow-off top, which was driven by the Hunt brothers cornering the market, are, at least from my point of view, not likely to repeat. And on this channel, I do my best to keep things based in reality. That's why I think I deliver a better YouTube product than people out there who have been promising you all $1,000 per ounce silver since 2010 or even before then. They've let you down. And I prefer to underpromise on these targets. But what I do right now is I invite you all to leave your point of view in the comments section below if you disagree with me on this. Now, with that said, it's time for this video's viewer question. Please remember that you can submit your questions in the comments section of every one of my videos. I read all the comments, and your question just may be the next one to appear in one of my videos. Now, this question comes from a viewer. You can see his name there on the screen. He kind of looks like Pablo Escobar, and he asks, is it bad if you stack just silver and don't have any gold? That's the first part of his question. And the second part of his question is, would you still stack silver if you lived in a third world country? And those are great questions. So I will start by saying that I think every stacker should have gold and silver. And I usually feature the one I am preferring at a given time in the Pimbex segment of my videos. And let me explain why. Because even if we all see massive upside coming for silver, I mean, I see it and I've talked about it at length here on the channel, it would be foolish not to own any gold, in my opinion at least, especially now seeing what central banks are doing. And I know some of you are silver-only stackers, but for me, I like the stability that gold provides, and I've said it many times here. And when I talk about stability, I'm talking about the fact that gold has yielded on a dollar cost average basis inflation-adjusted returns on value in US dollar terms on a consistent basis over the last 15 years. And you simply cannot say the same thing for silver. And now to the second part of the question. If I lived in a third world country, would I stack silver? Heck yes, I would stack silver. I've lived in many countries over the years. I've lived on 3 continents, and I've seen things that most of you watching this video right now have only either heard about on television or read about online. That is why every single one of you should subscribe to this channel, because I'm speaking from experience. I've seen things happen. And what I'm seeing right now in countries like Egypt, which just saw a huge spike in the price of silver in their local currency, up 62.45% in 1 week as they battle the black market exchange there in the country, is that if you cannot afford gold, if you cannot get your hands on gold, or if you feel uncomfortable owning something like gold, silver is the next best thing. It will protect you in a currency collapse, and people who live in Turkey, Egypt, Argentina, Zimbabwe, Nigeria, wherever it is, have seen extreme examples of this. If they were keeping large amounts of their savings in the local currency, they definitely wish they could go back in time and convert that cash into real money, and that being silver. Because despite silver's volatility at times and slower development over the past couple years versus gold, it protects you. And when silver moves, it really moves. So if you're in a third world country and are on the fence about buying silver, I hope this bit of information makes that decision much easier for you. So that's it for this video. I thank you all for watching. If you liked the content, please remember to leave me a like below. That helps get this content out to more people. It helps this message reach more people. If you think it was really valuable, please share it with other people, share it with family, share it with friends, so they can also hear what we're talking about and understand exactly what it is that's going on in the macroeconomic background and what the best way to protect yourself is against the debasement of fiat currency. And until the next time we see each other, everyone, take care of yourselves and take care of each other. I will see you all next week. And to my Patreon members, I will see you all very soon in a video. Take care and goodbye.